What is going on, everybody? It's Stas here. So we had a pretty choppy day yet again in the stock market today. We had the S&P 500 up 0.1%. The Russell went down 0.1%. We had the Dow Jones up 0.5% as the NASDAQ 100 went down about 0.5%. So today we're going to break down the market, some stocks, some charts, some earnings, and of course my thoughts on the market. So sit back, relax, hit the like button, subscribe, check out my Patreon down below if you guys want all my moves in the markets, and you could also get 50 free bucks from M1 Finance, also linked down below. And with that being said, let's get right into the video. So the markets, even though they were very choppy, we had some indexes green, some of them red. We had the VIX up about 1%, and it was up even more earlier in the day. Even though we had a lot of craziness across the board, the S&P 500 ETF that we track here on the channel, which is SPY, is still holding the uptrending channel on the 20-day chart. And you guys can see that right here. Pretty much when we pulled back this morning, we actually took out the lows from the markets. We hit a low, a multi-day low. I mean, it's nothing crazy, but when we're looking here, let's say on the 5-day chart, we actually hit a low today at about 464. And when we hit that point, we double bottomed, and then we ended up breaking out above the moving averages on this 5-day chart. And that's important because, again, going back to that 20-day chart, that is where the bottom of the channel is. So we doubled bottom at the bottom of the channel. We broke out, and now we're testing the moving averages, both the 50 and the 180 SMA. And we close under those. Under those moving averages, mind you guys. So this is a very important spot. If SPY could break out of 469, let's say, I'm going to put my alert right there, that would be a sign that, hey, maybe in the short term, we do end up ripping back up towards the all-time highs that we hit yesterday, which were at about $473.50. And the same thing goes for Triple Q, right? Let's pop it up. Triple Q ended up hitting all-time highs yesterday at 408.71. You guys should know that at this point. Then we saw a sell-off intraday yesterday, which led into the aftermarket yesterday, pre-market today, and at market open. Look at this intraday chart. When the market's open today, we got a little pop, but then we got devastated, right? This went from 400 down to 393. We saw some choppiness, and then we ended up closing on a nice upswing, which, going back to that 20-day chart, that is right by the bottom of the uptrending channel. And just like SPY, Triple Q closed under both moving averages, so that's a bit worrisome here on the 20-day chart. So we have to see a break back over, let's say, 400 for this to maybe have a shot to start going back to those highs that we recently saw. So I put my alert at 400 for Triple Q, and on SPY, again, I put it at $469. So what do you guys think? The markets are very choppy right now. We have tax loss harvesting going on. We have interest rates finally being priced in. And I feel like what really sped up the drop of a lot of these stocks, more of the growth-oriented stocks, sure, they had a lot of the interest rate increase pressure, all that pressure was somewhat priced in, but now that Powell is appointed, he was appointed yesterday for another 4-year term, investors and traders, they're like, okay, this is really happening. It's really happening. Powell is now in. He's probably going to hike the rates up 2, maybe 3 times in the next year and a half. So it's time. It's time to start selling a little bit, locking in profits, moving out, rebalancing, putting money elsewhere. So that's kind of a little bit of what we're seeing, because a lot of the traders and investors out there, at least in my opinion, I feel like they weren't necessarily too worried about the interest rates a month ago, even a couple of weeks ago. And now it's kind of dawning on them. And, now that Powell got appointed again, like I said, for another 4 years, they're like, okay, maybe we slowly need to start taking action. That, along with the tax loss harvesting, that is what's causing a lot of these stocks to just get obliterated, which we did talk about a lot of stocks, 5 in particular, in my video from earlier today. So make sure you guys check that out. And if you all are finding value in this video, as always, hit the like button, drop me a comment, let me know your thoughts, and subscribe, because a lot of you guys, I check my analytics, a lot of you are not subscribed, so make sure to subscribe, hit the notification bell. And with that being said, let's talk about some other stocks here that are reporting. They did report, all of them did, and some of these are getting destroyed. And number one is Nordstrom, which is getting obliterated, guys. I don't even know what to say. It is so bad. This stock closed at $31.93, pretty much at $32 per share today, and now it just hit a low of $23.84 in the pre-market, which is a drop of close to 30%. So let's see what happened. JWN reported 39 cents of EPS versus the 22 cents a quarter, or rather a year ago in the same quarter. So year over year, EPS is up. But obviously the stock doesn't give a crap, right? And revenue came in at $3.53 billion versus the $3.54 billion estimated. So they missed revenue, which is not a good sign. And we see here fiscal 2021 revenue is expected to grow more than 35% versus fiscal 2020, which makes sense considering last year was not the best year across the board, especially for companies like Nordstrom. And I can't really put my finger on why this stock is just getting destroyed. I mean, I have no freaking idea, and I'm so happy that I got out of Nordstrom. If you guys are in my Patreon, you know this is one that I was in. I actually made some money on it. I bought it at like 28, 29, sold it at 34, sold a bunch of covered calls in between me holding it, and I'm so happy I'm out of it now because I'm looking at it as a potential re-entry. But on top of that, if I was in it, which is why I'm happy I'm out of it now, if I was in it and I still held it, I would have gotten destroyed. I would have got my boots smoked on this stock. And now at this point, I'm just looking at it. It's a falling knife. Maybe we get some sort of consolidation, some sort of re-entry, but I'm not going to force it, guys. I'm not going to force it. I'm going to give it a couple of days. So let's watch JWM here heading into the rest of this week, next week even. And we had HP report today, ticker symbol HPQ, and this, unlike JWM, this one's doing very well. The stock closed at $32 per share, and it ran up to almost $38 in the aftermarket. So they reported EPS of 94 cents versus 88 cents estimated, so they beat EPS, and revenue also beat $16.7 billion versus $15.4 billion estimated. And on top of that, they see full year 22 adjusted EPS of $4.07 to $4.27, that range right there, versus the $4.05 estimated. So nice guidance from HPQ, double beat. What else can I say? That's pretty solid. And now the stock is breaking out. Remember, we actually talked about this, I believe, a couple of days ago. Maybe it was in my Sunday video we covered it. HPQ, we have two main levels here, right? Number one is at about $33.50 to $34, which is trend line number one here, the bottom one. You guys can see that was resistance back in the middle of May, which is why I drew it out, because that was a major spot for the stock, right? And level number two was at $35.75, $36, which was resistance in the beginning of May. And clearly, guys, we broke $33.50, we broke $34, now we're trading at $34.50 in the aftermarket, and we actually filled the entire gap to $36 as well momentarily, but now we're trading under it again. We're trading at $34.50 right now, so it seems like HPQ wants to fill that gap. And I'm not necessarily going to rush into this, same like JWM. I kind of want to see if we consolidate anywhere from $33 to $34 for a couple of days after this nice earnings report. And from there, maybe we start filling the gap to 36 and beyond. And that is where we could jump in potentially as a trading opportunity. And as always, please, guys, do your own research, do your own due diligence. Don't buy or sell or do anything based on these videos. I am not a financial advisor. This is all for entertainment purposes only, right? I'm just giving you all my opinions here, kind of what I'm seeing. So triple or double BBY, also known as Best Buy, guys, yes, that did rhyme a little bit there. They also reported this morning, and the stock got obliterated. It went down 12%, and in my opinion, this probably was a bit of an overreaction considering their earnings were not bad. I mean, they did $2.08 EPS versus $1.91, so they beat EPS. Revenue also beat $11.91 billion versus $11.56 billion estimated, so double beat. And on top of that, they raised their full year 2022 revenue outlook and their same-store sales outlook. But one thing worth mentioning, which makes sense, is their e-commerce growth slowed down. And why does that make sense? Well, it doesn't take a rocket scientist to answer that question, guys, because last year, everyone was pretty much cooped up in their houses, right? Ordering online, doing all that stuff. And don't get me wrong, people are still ordering online, but more people now are out and about shopping at physical locations. So it makes sense why e-commerce growth has slowed down. And believe it or not, we actually covered this on the channel recently. We talked about BBY, said it was very overbought. We wanted to pull back down towards the 180 SMA on the 4-hour chart, and lo and behold, that is exactly what we got. The trading gods answered our prayers, and here we are. The stock's down from 140 down to 117. We bounced off the 180 SMA. We're already seeing buyers stepping in. Now, this could be a slow gap fill back towards 130, 140. Definitely possible. So I'm looking at BBY as an entry point here moving forward, anywhere from 115 to 125, that general range. We also have DKS report, Dick's Sporting Goods. It went down 4% on the day. They did adjusted EPS of $3.19 versus $1.95 estimated. So they crushed EPS. Revenue also beat $2.75 billion versus $2.49 billion estimated, so double beat. Same-store sales was up 12.2% versus the 3.5% estimated, so that's good. And they see, excuse me, guys, they see full year 22 adjusted EPS of $14.60 to $14.80 versus $13.13. So pretty nice guidance. They beat EPS and revenue. Same-store sales destroyed the estimate, and the stock went down a decent chunk. I think it was down like 10% at one point. But you guys can see buyer stepped in at $123, and this thing saw a $10 intraday rally. Look, it was at $145 pre-market. Dropped to 123, so it dropped $20, and then it went from 123 to 135. So buyers stepped in. They realized, okay, this dip was a bit of an overreaction on decent earnings, and they stepped in, bought it up. That's why we saw that $10 intraday rally. And at this point in time, we're simply holding the uptrend. The uptrend's holding on the 4-hour chart. We're above the moving averages, and this might go back to the 140s, mid-140s, high 140s. Definitely possible. So cheers to that, guys. Let me take a sip of my coffee here to clear my throat up, and we'll talk about the next stock. Hold up. That's a good one right there. We have an espresso. If you guys know what that is, I'm not sure. Most of you guys probably know what that is. I'm drinking I think it's called like a Puerto Rico. I forget. It's like a 2.7 ounce. It's a double espresso. So I'm a bit wired right now. Let's get into stock number 5. I think it's stock number 5 here. Make sure to hit the like button if you guys have not done that quite yet. And let's talk about it. UNH, United Health Group. This one up 2% today, up $10. And we have been saying this dip is attractive, right? We broke out a 430. We ran a 470 pretty much. We pulled back, profit taking, healthy pullback, completely normal. And now we're rallying off a 435, 430. We saw a nice pop above the 180 SMA as well, and I think this rally could continue, especially as the Dow stocks, which I think UNH is in the Dow, right, in the Dow 30, right? The Dow stocks have been doing pretty well. You know, a lot of these, their earnings are not priced into the future heavily. A lot of them make a lot of money now in real time, which interest rates going up doesn't really affect companies like that as much as it does companies like a DraftKings, like a Chewy, where a lot of their earnings are projected into the future. So that's kind of why we're seeing a lot of the Dow stocks do well. If you notice today, Energy did well, banks did well, UNH did well, and I think that could continue here heading into the end of the year. So watch out for this dip from 445. Even here, it's pretty oversold. We're running up, maybe back up to 460 plus. That's possible in my opinion. And Amazon. Let's pop Amazon up, guys. Amazon looks pretty good in terms of the chart, and this one's pretty close to all-time highs. If I were to guess, if I were to go crazy and do a short-term call option, which I don't do anymore these days, guys. I used to do that back in my younger trading days. If I were to go crazy, I would bet that Amazon rallies into the end of the year. Maybe not. I don't know. It might not happen, but I have a feeling it might happen, guys. What I'm noticing here is a clear breakout. It's been breaking out. It's above the moving averages, and we hit almost an all-time high recently at 37.60. That was literally 5 calendar days ago. And we ended up pulling back from there. Now we're at 35.80. The stock's pretty oversold on the 4-hour chart. And mind you, we're holding an uptrend, high or low. We're above both moving averages. And on top of that, I'm noticing an ascending triangle. Clear resistance at 37.70, but we're uptrending into that resistance. So I think this dip on Amazon will be bought up. Now, am I buying the dip here? No, because I already own Amazon. You guys in my Patreon know that. I actually bought more of Amazon recently. I think it was at like 32 something, 33. So I've already bought a little bit here and there over the past couple of weeks, so there's no need to buy more of it. But hey, I'm already positioned. If you're not in it already, I'm not telling you what to do. But hey, this might be a decent trade up to 3,700. And I personally own Amazon from under 3,000. So, I think I started buying it at like 2,000 or 2,500, averaged up. That's kind of the way I've been, buying into Amazon. And I don't always buy a full share. In fact, most of the time, I'm just averaging in with fractional shares. Using M1 Finance, using Fidelity. Now you could do fractional shares, so you don't need to go all in. You might look at this and be like, oh, it's $3,600 per share. You can do fractional shares these days, guys. Beautiful times we're living in, right? So watch out for Amazon. And the last one for today is Texas Instruments, right? This one clearly uptrending over the past couple of months. It's maintaining this uptrending channel, and now we're battling the moving averages. You guys can see if I zoom in a bit, 195 has been resistance for this whole month of November. We've tested it once, twice, 3, 4, 5, 6 roughly times, and we failed literally every single time. But one thing I'm noticing is we have failed every time, but we're actually holding higher lows. So that's kind of an ascending triangle forming, right, within the overall uptrending channel, which you guys can clearly see on the 4-hour chart. But if you focus on this 20-day chart, you're seeing that ascending triangle, and you're already seeing buyers step in today at 190 to push it up over 193 in the after hours. Uptrends continuing. So I think if we break 195, I'm going to put my alert right there for Texas Instruments. If we take that point out, this will probably see a leg up back towards 200, probably even over $200 per share. 205 could be where we go. That's what I'm thinking. So set your alerts. TXN looks pretty solid. And yeah, guys, that's pretty much it. JWN, HPQ, BBY, Dick's Sporting Goods, UNH, Amazon, TXN. That's what I'm watching right now. So if you all found value in this video, hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. If you guys want all my buys, sells, call outs, morning update videos, more access to me throughout the day, a bunch of awesome content. I'm putting in a lot of work on Patreon. Check it out. It's linked down below, or you guys can go to StockSurfest.com/Patreon. Make sure to also get your $50 from M1 Finance and your 2 stocks from Webull up to $1,600. Those are linked down below. I'll catch you guys in the next video, which I made one earlier, going over 5 extremely oversold stocks. Check it out. I'll see you there. Thanks for watching. Keep crushing the market. Stay safe out there. Peace out.